of this particular phrase or this particular clause 66EE, to my mind, you cannot read this in a very wide sense. You have to read it in a narrow sense. The first indicator to this, to my mind, is it starts with two words which overemphasize the intention. It says agreeing to an obligation. They could have just said agreeing to refrain from an act, but they said agreeing to an obligation. That means there has to be an agreement, and it has to create an obligation. And if that two words, to my mind, overemphasize the fact that this clause will come into play only when you have a separate agreement or a separate contract for certain things to do or not to do some things. For example, non-compete is the classic example which everybody gives, which has been given in the education guide. Right of way is something which is also an agreement will get covered over here. There was a recent case in Mumbai where a builder paid an X amount of crores to another builder. So he was building a sea view apartment. There was a plot ahead. The builder was going to build his building. Now, if the builder had built, then he couldn't have sold his flats at a higher price because the sea view was getting blocked. He paid that builder price to say that I will pay you so many crores, you delay your launch of your project by 2 years or by 1 year. Agreeing to an obligation to do an act, which is to delay. Again, only such transactions where you have a specific agreement to do something or not to do something, those should be covered. We cannot really interpret this in such a wide term that everything falls into the pot, because in that case then there is no requirement for a definition of service or a charging provision. Service, not a charging provision. Everything will become taxable. So to my mind, this is the way we have to interpret that such a transaction, the provision. And here, with this particular aspect in mind, I feel a notice pay, which is recovered from an employee, cannot fall under the 66EE because there is no specific agreement. Yes, there may be an agreement, but that agreement is more in the context of an employment, in the course of an employment, and therefore it should not fall here and it should not be liable for payment of tax. Literally speaking, if I only read that particular clause, anything and everything fall under that, can fall under that. Now that is of course going to be a challenge and it's going to lead to substantial litigation. The next is, of course, going further on a cafeteria which has been set up. Now, the group has, this was again discussed by Divane and Parwane, and most of the places the discussion has been that these are all supply of goods, these are all sale of goods, and there is no liability for service tax. However, perhaps I am not being very clear in the questions which are raised, and let me just explain what the intention of this particular question was. The question was, of course, in relation to providing restaurant or cafeteria services to the employees. And when I mentioned over here that in an office, the cafeteria, the dining area, furniture, waiters are all provided by the employer or this particular entity, which is the People First Limited, they were going to be, in most cases, the intention was that they will be allowed to be running under the supervision and control of the third party, except in option 1, where we said that he is going to be controlled by People First. So let me take this one by one. In the first option, the question was that a third party contractor will come and he will prepare and supply the food. Thereafter, the facilities are completely under the control and management of the company, which is People First, and this food will be provided free to the employees. Yes, to this extent, both the groups have correctly reflected that this is a transaction of sale or supply of food on which there will not be a liability of a service. Using this food and the various facilities, the food catering of food is provided to the employees, but it is free and therefore there is no liability for payment of service tax. The second is a situation where all the facilities are there and it is provided by People First, one under its own control, but the third party is charging the employees, again a transaction of sale. However, bringing a variation on this, if all these facilities, which is also normally seen in the case of a catering contract or a canteen contract, that you provide the facilities but you ask the canteen contractor to run it. In which case, the third party contractor will run the cafeteria, will prepare the food, he will use the various facilities to provide the food to the employees at a concession rate. That could become a transaction of service. a transaction of a service as an eating house or some sort of a restaurant on which there will be a liability for payment of service tax. There is this new exemption which has been introduced in the mega exemption notification ended 19A in respect of factory canteens, in which there is provided an exemption. So you need to examine whether that particular exemption is going to be available or not. The third option was similar to option 2. The only variation in this option is that People First Limited was going to pay a subsidy to the canteen contractor. And here was a discussion which I want to have. Of course, both of the groups have provided that there will be a liability for payment of tax on the subsidy. The question is, how do you treat this subsidy? Will you treat the subsidy as part and parcel of the service or the food services which is to be provided, or will you treat this subsidy as a separate transaction? Now, whenever you have a subsidy provided, there could be two kinds of subsidies, and let me elaborate this a little bit. People First Limited wants its employees to receive food at a concession rate. They say instead of a cost of thali of 100 rupees, you will only charge 40 rupees. People First Limited can go to the third party contractor and can tell him that instead of 100 rupees, you please charge my employees 40 rupees, I will pay you the 60 rupees. One way of doing it. The other way of doing this is that People First Limited will say, you provide this at a 30%, 40%, 50% concession to my employees. I know you will be running a loss. What should be your loss? It will be say 2 lakh rupees a month. Every month I will pay you 2 lakh rupees. Then I will not go per plate or per dish. And here we also have some decisions of the courts or the Supreme Court on how this should be interpreted. Whenever there is a separate consideration which is provided on a per plate basis, the logical interpretation will be that the per plate consideration is an additional consideration for the same service. That means if the food which is provided by the third party contractor to the employees at 40 rupees is going to be taxable as a restaurant service or as a service in the eating house, the 60 rupees also forms an additional consideration for the same transaction and therefore needs to be added. And therefore that is the way that subsidy will have to be treated as an additional consideration. If you are getting a 40% abatement or a 60% abatement on the supply of the food in the canteen, you will also get the 60% abatement on the 60 rupees which People First Limited is going to provide. However, the treatment for a fixed sum or a subsidy is going to be different. The fixed sum or subsidy, to my mind, constitutes a separate transaction, and that is not relatable to any other service. That is a fixed sum which is provided to provide food at a concession rate. That clearly gets covered under your agreeing to an obligation to do an act. Agreeing to an obligation to sell to your employees at a concession rate for a consideration of 2 lakh rupees every month. Whether I am selling supplying food to one employee or to 1,000 employees, you will give me 2 lakh rupees every month. And therefore, in this example, if you will see that the question was that People First Limited will be paying a fixed sum or a subsidy per month to the third party contractor, and this particular transaction will then get covered as a separate transaction, liable to tax at 12.26%. It does not get clubbed with your canteen services and doesn't get taxed over there. So that's the full applicable rate which needs to be paid. The fourth is a question where the third party contractor will charge People First Limited, and People First Limited will be recovering this money from the employees, irrespective of whether they enjoy the food or not at a concession rate. And many companies have this particular treatment. They recover, for example, 10 rupees per month from the employee salary, whether you eat or you don't eat. And what would be this transaction? So far as the Diwali group said, this is a pure supply or sale of food. And again, Parvane also positively it is a supply or sale of food, and the nominal amount which is recovered is in the course of employment. I feel that looking at the nature of the transaction, this should be treated as a separate supply. There should be treated as a separate supply of food on which People First should levy or pay the service tax. Of course, they may be entitled to claim the credit of the taxes paid to the canteen contractor. But however, there will be a separate supply on which there should be a liability for payment of service tax. Going to serial number 3.
At full rate, sir? At abatement?
at full rate or it may be at a better rate. Yes. Question number 3 was in relation to intermediary services. And essentially the whole idea of asking this question was to say what is an intermediary services and how different and a simple activity can change the nature of the transaction. The example which is given over here is that the Singapore entity, which is by the name Credit PTE, which is a Credit Singapore, it has a subsidiary in India, separate legal entity, Credit India. Credit India provides assistance to Credit Singapore in two ways. Sometimes Credit Singapore is engaged in the business of providing loans in advance. So many times Credit Singapore say has certain customers in Singapore. They will tell Credit India that I have this customer. Can you go and help me with some activities such as documentation, risk assessment, such services. So the employees of Credit India will go to the company which is requiring a loan. All the customers are identified, the prospective customers are identified by Credit Singapore. They will do the discussions, they will provide the information, they will do the credit assessment, the documentation, and send it back to Credit Singapore. The other alternative is that Credit Singapore also tells Credit India, please also scout for new customers in India for me. And for new customers, obviously Credit India will go, they will look in the market, they will identify customer, they will go and market the services of Credit Singapore, and if the customer is interested, again go through the same, send a proposal, give a proposal to them, discuss with them, do the credit assessment, the documentation, and then the loan is provided by Credit Singapore. And the question is whether in these two transactions, where will both these different kinds of services fall? Will any one of these or both of these fall under the definition of intermediary services? Now, intermediary services is a little badly defined, and I'll just read this out for the sake of everyone. It's there in the paperwork. Intermediary means a broker or an agent or any other person, by whatever name called, who arranges or facilitates a provision of a service, hereinafter called the main service, between two or more persons, but does not include a person who provides the main service on his own account. So here is a person who arranges or facilitates the provision of service, which is the main service. In this, our example, the main service is giving a loan by Singapore, but does not include a person who provides the main service himself. So you should not provide the main service himself. Now, the way this is worded, you have to facilitate the provision of service. To my mind, in the first case, in the first scenario, where the customer is identified by Singapore, Singapore is telling India that you please go and undertake a credit risk assessment, complete the documentation, and I will disburse the loan. I will of course take a decision on whether the loan is to be granted. To my mind, here the services of Credit India is actually to provide some sort of a back office or a support function, and therefore this should not fall under the definition of intermediary. But the second kind of a service, where he also scouts for employees, identifies, sells, or convinces the customer that he needs the service, and thereafter sends a proposal, then gets into a credit risk assessment and other support function, that should be a transaction which will fall under the intermediary services, and therefore will be hit by Rule 9, and therefore to become taxable at the location of the service provider. And there could be a lot of such instances which get taxed because of intermediary services. So there are certain examples which I can give you which should not be intermediary services, and one is of course call centers. A call center can respond to a call from an Indian client on behalf of a foreign entity. And that of course that question may or query may be for a bank, for example, for a service which they want. But he is only responding and providing a service which is a distinct service from the service provided by the bank, which is a call center service provided by the bank may be a banking service or a credit card service, and therefore to that extent, to my mind, we will not be an intermediary. Similarly, in construction, subcontractors are not intermediaries because they are providing the main service itself, and the definition it is said does not include a person who provides the main service on his own account. So when something is subcontracted, it goes out because he is providing a main service. He is supplementing the main contractor. Similarly, recovery agents, and the education guide says recovery agents are intermediaries. I feel they are clearly not. Because what is a recovery agent doing? You have given a loan to somebody, then I encourage somebody to go and recover that loan. He is not supplementing my efforts. All he is doing is a separate transaction. It's as if I am engaging a lawyer to write send a notice Will the lawyer become an intermediary? Clearly, the answer is no. He is going to follow, he is going to convince, cajole, pressurize, or threaten to pay the loan. But to my mind, such a recovery agent does not become an intermediary. He continues to provide an independent service and should not be an intermediary. The education guide also talks about tour operator. Again, to my mind, a tour operator cannot be an intermediary because I am not interested in availing the services of an airline or a hotel. I am interested in touring a particular destination for which I require an airline, a transportation, or a hotel, and therefore a tour operator, to my mind, should not be treated as an intermediary. On the other hand, intermediaries like marketing agents are at a risk of being treated as intermediaries, and the issue is huge in the case of financial services sector. There are a lot of challenges for all these external commercial borrowings. With the Indian arm always will market the external commercial borrowing, the disbursement is done by the foreign head office of the branch. Therefore, all of this unfortunately are getting covered under intermediary. Representation offices again is a risk. Booking agents will become intermediaries, hotels or airlines, including websites. When you go through a website, then how do you treat the website, which is effectively booking, and they are in a way facilitating the provision of a service between a customer and a service provider. Recharge coupons for airtime. Again, the distributor is effectively an intermediary because the distributor is not really providing the service, he is only facilitating. He buys the airtime, he sells the coupon, and to my mind, he should be treated or he would be treated as an intermediary. I think one of the reasons is that they have also included that in the mega exemption notification where these distributors are exempt from payment of service tax. So this was the background of query number 3 on the distinction between intermediaries and others.
Even the market research will be covered?
No, market research is not an intermediary because he is doing some research and providing a report. Then he is not facilitating or arranging.
Reinsurance broker?
No, reinsurance is a principal to principal transaction. It's not. Sorry, reinsurance broker making. I'm sorry, I missed the word broker. Reinsurance broker making, and I think there is already a challenge on that along with ECBs. With the reinsurance broker being in India and the reinsurance taking place outside India, it's unfortunately getting taxed. I'll quickly go on to question number 4 and I'll give you the background of this question number 4.
Sir?
Can we just have it, the queries later on, please? Question number 4 is for a gold deposit scheme, and this is becoming very relevant today with the current account deficit we are having. So RBI notified a gold deposit scheme, and the scheme was something like this. They said that if you have gold, then you can deposit this to the bank and you can get interest on this. So say you have 2 kilos of gold, and let's take an example of gold bars. This is also possible for the jewelry. In say you have 2 kilos of gold, you can go to a nominated bank, you can deposit your 2 kilos of physical gold over there and you get a gold deposit certificate. This gold bears an interest, say for example interest at 10%, just for the sake of simplicity. And if you deposited this for a period of 1 year, then you get interest for 1 year at the rate of 10%. Now how is this interest calculated? Interest is also calculated in weight. Therefore, on 2000 grams, at the rate of 10%, your interest is going to be 200 grams. So at the end of 1 year, when the interest is due to you, you get interest of 200 grams. The rate of gold on the day after 1 year is converted into rupees. Say it is whatever 3000 rupees a gram. Then they will convert that into rupees and they will pay you that much, 6 lakh rupees as the interest in cash. The question which has arisen is when this gold is deposited and the interest is received, how should you treat this under the service tax law? Will there be liability for service tax or will it not be liable? I'll give you a slightly different example which also I wanted to bear in mind when we discuss this particular point. It happens even in business and commerce today. You go to Taloja, there is a line of chemical factories and all these are manufacturing facilities. All these are known to each other, they are there in that area since many years. They always have an informal understanding. Say one factory has a shortage of raw material, he is ordered it from somebody, it's going to come after 10 days. He will go to his neighboring neighbor and say, I want this raw material, 10 tons, can you give it to me? When my raw material comes, I will replenish it. So his neighbor will give him the 10 tons, he will use it in manufacture, sell the manufactured product. When he gets his supply, he will return the 10 tons of raw materials. This is also done. This gold deposit scheme in a way is the same. Where when I deposit with the bank will, I get the interest, the bank will have my 2 kilos of gold. What will the bank do with it? They will go and sell the gold in the market to a jeweler. After 2 years or after 1 year, I can go with the certificate and get my 2 kilos back. At that time, he will pick up any 2 kilos which is there in the stock. He may have bought, the bank may have bought it in the market, and they will also structure it in such a way that they can also sell at say 30,000 and buy at 29,000 to make a profit at that time, and he will give me my 2 kilos back. So the question is, this interest, what does it constitute or what does it represent? Should it be liable? Is it for a service? And if it is for a service, is there a liability for payment of service tax? Now, this was again discussed by Diwani and Parwani. Diwani, so far as the interest is concerned, Diwani said that it is a deposit. It is covered within the definition of interest, and therefore it is not liable. Under the negative list, we have an exemption which is granted to any deposits, loans, or advances where the consideration is represented by interest or discount, and therefore they have said it is interest. And Parvane has also discussed the meaning of actionable claim. They felt that this is not covered in the definition of actionable claim, but it is a deposit, and they have said it is then covered because it is in the nature of interest. Friends, there is one more angle which we also need to consider. First, go to the definition of service. Then look at whether it is an actionable claim. An actionable claim is defined, of course, it is a definition which is very honestly only for lawyers. Chartered accountants find it difficult to understand. I really don't understand. Every time I read it, I come up with a different answer. So I still read out.
CS understand gold.
But not ours. Others. We have to only say the interest is taxable. So actionable claim means a claim to any debt other than a debt secured by mortgage of immovable property or by hypothecation or pledge of movable property. So far it's not covered because it's not a debt. Or to any beneficial interest in movable property not in possession, either actual or constructive of the claimant, which the civil courts recognize as affording grounds for relief, whether such debt or beneficial interest is existing, accruing, conditional or contingent. So I think Sridhar House can perhaps throw better light on this, but the way I read it, that to my mind, such a deposit should not be an actionable claim, because here it also talks about the only place or only phrase under which it can fall is whether it is a beneficial interest in movable property not in possession. And beneficial interest, the way it is explained in the Black's-Law dictionary, also it is also covered somewhere in the education guide. They say it is a right or expectancy in a thing. That means a beneficial interest, the way it has been read, is to say the benefit arising from the gold is what I am entitled to, not the gold itself. So the interest is not in the gold, but interest is in the benefit arising from that gold. Now certainly here, when I deposit, when I have a gold deposit certificate, it's not only the interest I am entitled to, but the gold deposit certificate effectively represents the gold itself. So I felt this may not really get covered under the definition of actionable claim. The second question was, thereafter, when you go further in the definition of services, can I say that I am giving 2 kilos of gold, I will get my 2 kilos of gold back? This will be lease of the gold, transfer of the right to use gold, because for 1 year I am allowing the bank to sell the gold. Then he will replenish by buying something in the market and return 2 kilos. Of course, it will not be the same brick, it will be some other brick. If you give jewelry, they will melt it and they will give you bricks of that much weight back. So again, it's not going to be the same gold which you give. Now, the concept of transfer of the right, I felt, is not covered here. Because transfer of the right presupposes that I am giving the right to use a particular asset which is used and returned to me. Here is not a situation where I am envisaging the return of the same gold which I am giving after use. It may be any other gold, is more for replenishment. So I interpreted to say that this does not get excluded from the definition of service. It is a transaction of service. Let me go back to my example of the chemical factory. You go to your neighbor, tell him, can you give me 10 tons of this raw material? I will pay you 10,000 rupees per ton. When my raw material comes, which is worth say 2 crores, I will pay you this back, but for 10 tons I will pay you lakh of rupees. Will you say this is liable for service tax or not? To my mind, clearly that's a service on which you will pay service tax. So here I am again going unfortunately towards a interpretation to say that this is a service and the interest then represents a consideration for giving the gold, which is not an action of the claim, not a transfer of the right, and therefore may become taxable. The only other aspect which I need to go and consider is, can I go on a negative list to say any deposit loans or advances where the consideration is represented by interest or discount? When I am depositing the word deposit is not defined. Yes, I can clearly take an argument to say that the word deposit is a deposit. But the consideration for the deposit should be interest. I am getting interest. Then there is a definition of interest in our law. And just to quickly read this definition, is there in the paper book. It says interest payable in any manner in respect of any monies borrowed or debt incurred, including a deposit claim or other similar right or obligation, but does not include any service fee or any other charge in respect of money borrowed. So that second little bit need not really worry. It says interest payable in any manner